So, guys, we've heard from the banks and institutions, and they can do some things at the moment. They can tokenize a limited amount of assets or securities. To start with, I've got Daniel Coheur from Tokeny, Graham Rodford from Archax. And so we've got the company that creates the tokens and manages the life cycle of the tokens, and we've got an exchange that's being created specifically for the management of security tokens. So to start with, Danielle, from your perspective, can we run security tokens at scale today?
Well, probably not, because it was already mentioned in the panel before. We have not yet the infrastructure that enables to do that. I think that we have to deal with a couple of misperceptions. First of all, how many of you heard about security token before the summer? Earlier this year, January? Okay. So, I work for Clearstream Banking. Usually we were running a project. It took about, a couple of months to identify a project manager. So we really start to develop our solution in March this year, so 6 months from now. So I think that, yes, we still have work to do, but before we can really bring scale to what we do, we indeed have to deliver the proper tools and solution for the regulator to feel comfortable, for the investors to feel comfortable, for the issuers to feel comfortable as well. This is thing in progress.
Okay, and from your point of view in terms of the exchanges?
Yeah, I agree. I guess if you really want to embrace DLT and blockchain and what you can do with security tokens, then there's probably a bit of a way to go. If you want to start building regulation and legal constraints into the smart contract, then there is a while for the infrastructure. But if you kind of take a step back and move at baby steps, then perhaps we're a bit closer. So I think anyone today could take shares in a company, tokenize them and allow them to be traded on a regulated MTF. They wouldn't necessarily be all that security tokens could be, but they'll definitely be tradable. They'll look and feel like real securities, and it will enable institutions to start getting comfortable with the idea. I think we're a long way off of having exchanges and tokenizers being able to freely allow security tokens to move in an interoperable way with all of the regulation and legal constraints built in.
Okay, and is this it's a global phenomenon. You're both based in Europe, Luxembourg and the UK. Is this going to happen globally?
Yeah, I think so. I think one of the attractions is the fact it can happen globally. So from our point of view, we're setting up an MTF, a regulated exchange in the UK, but we're not focusing just on UK issuances. The kind of ideal golden goal will be global issuances marketed in a global fashion. And obviously to do that, you need to understand the issuing rules of every jurisdiction, the marketing rules of every jurisdiction. You need to be able to categorize all of your buyers and sellers, and you somehow need to bring all of these together in a smart contract. So I think when it comes, it will truly be globally. But for now, there'll be a lot of workarounds and a lot of people working on improving the token standards to allow this to happen.
Daniel?
I totally agree. This is a work that we started already a couple of months ago. It's to map the different regulation, transactional rules that have to apply to those tokens, and then obviously develop the tool that enable to issue the smart contract that will deal with those rules. We are working with DLA Piper in order to build this ecosystem and enable them to have those tokens that will be globally compliant to trade in those centralized or decentralized exchanges.
And in terms of, so we talked about scalability here. To become truly globally scalable, what needs to happen?
Well, I think that we indeed are at the early stage of this industry. So what we need, I think we mentioned that in the panel earlier, we need investors, we need institutional investors to believe in this industry, and they will be the one unlocking the potential of this industry. But as you mentioned, Graham, it has to happen step by step. I mean, we have already done a couple of STOs. We helped the company Lyceum to raise 250 million for an investment fund based in the Cayman Islands to purchase real estate in Manhattan. We helped another company, MASH, based in Finland, to raise 50 million of private equity. I mean, this is happening now, step by step. And once investors and issuers will have more confidence, I think we will go towards a mass market.
And as an exchange, I mean, in the end, do you think you replace the traditional exchanges? You replace the London Stock Exchange, for example?
I think if they don't adapt, then yes, then they'll end up being replaced. I think what we'll see, and we touched on it on the panel earlier, is people are asking where's the demand's going to come from, and we've spoken to a lot of institutions and the demand is there, but what you need is to start seeing smaller companies and places where the advantages are really key to start making a move. So Leeson was a great example, actually, a Cayman fund issuing 250 million in the security token. It's a great use case for blockchain, having a secondary market. We talked about earlier, private equity, hedge funds, secondary markets, they're completely clunky. It's a great use case, but companies like MASH that are profitable, based in Scandinavia, they've got revenue streams, that's more of a traditional case. And I think what you'll see is the smaller private equity, hedge funds, illiquid property companies tokenizing, some SMEs tokenizing, and they'll be the guys that really start to get the traction and make the space attractive. And then what you'll get is you'll get a blue chip company looking over and realizing that this is a capital market that was previously inaccessible, and then you'll start to see a ramp up in the medium-sized entities. So I think the small companies will do it for the capital markets, and they'll stay for the efficiencies, and then the bigger companies will come because they see a capital market opening.
Yeah, I totally agree. I think also that liquidity may come from a different angle than what people are expecting. I think people see STOs as the next wave of utility token offering. I believe this is totally wrong. Those are different type of company, different type of rules, different type of investors. So this is a totally new market. And I think that if you look, for instance, at the capitalization of a listed company in the US, I think that it represents around $37 trillion, and non-listed company represent $36 trillion. So what if you use those assets for collateral? Not for reselling. I mean, as an issuer, I don't necessarily want my shares to be traded the next day I'm issuing them. But what if I use those tokens, as you would basically use today your house to get a loan, and you would mortgage your house. The bank will take a haircut, will give you whatever value for the house. You could do the same for tokens. If you issue tokens that have an underlying value, either real estate or pre-IPO company, and go and talk to your bank and get your collateral value for that. I mean, $36 trillion of asset that can flow into the capital markets, that create a massive new opportunity for people to go and get money from those assets, which today is simply not possible.
Well, okay, so January, we're pulling together this ecosystem. We're talking about things that need to be solved. What would you say are the top two things we need to look at solving?
I mean, we have to educate. I think that today we spend most of our time talking to people to explain them what this market is about. So we have, as one industry, move forward, educate, and reinsure indeed this industry that STOs are not ICO. There are rules. This is a market that is regulated, and obviously we need to simply go together into that direction. I'll leave you the second one.
Well, I absolutely agree on education. I think Daniel's bang on with that. And I think the second point is probably regulatory clarity. From our point of view, we're operating on the basis that securities are absolutely regulated. We've been based in the UK. We think it's a fintech hub of the world. Post-Brexit, there's an opportunity there for the UK to really accelerate. So I think having clarity from the UK, from the FCC, will be great. Being able to have a golden stamp from a regulator, which will allow you to kind of penetrate into the institutional network. So I think once you've got that, you'll see that banks are able to start looking and say, okay, there's a regulated exchange in the UK, working with regulated tokenizers. That's the sort of people we can counterparty with. Whereas I think in the past, with cryptocurrencies and ICOs, most of the exchanges were non-transparent, didn't really have the controls in place. So I think being able to work with regulated counterparties in a clear regulated framework, I think is key for the STO market.
I guess that's confidence as well, isn't it? Because I know running this event or talking to people about it, they go, oh, that's Bitcoin or that's ICOs. So this one of the issues, I guess, for this industry is it's merged in with the ICO Bitcoin perception.
Yeah, it's a huge problem. The media perception is a huge issue, and it's one we face all the time. As soon as we say to people we're launching an exchange, we're already bucketed into cryptocurrency exchanges, and I think they're completely different worlds, but they share similar values in terms of what's achievable with a blockchain. So I think having clear regulatory landmarks around security tokens, why they exist. I think in the Daniel's point earlier was a good one. Who'd have heard of this at the start of the year? And what you see in this space, and we've seen recently with security tokens, is things catch on very quickly. So, you know, security tokens maybe weren't such a big thing at the start of the year, but recently everyone's been talking about them. Now ICOs are completely out of favor. People are looking at launching STOs. People are talking about regulated exchanges. There's, you know, a number of companies like Tokeny that are developing their own standards and looking at ways the interoperability can work. So I think, you know, it's very timely, the conference, and I think this will move a lot faster than people think.
Okay, well, thanks a lot, guys. Much appreciated.